Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everyone, Brian Hayes here with Zacks Investment Research, and welcome to our top stock picks of the week. This week I'm joined by my colleague Nina Mishra. We have two exciting picks for you, so let's jump right in. I want to start with natural gas prices. The trade war with Canada is lifting natural gas prices, which notched a fresh 2-year high on Monday. And while we're now entering a seasonal period that normally suggests a decline in gas prices, Trump's proposed tariffs are taking over the driver's seat. In addition, signs that U.S. natural gas storage levels could tighten further are keeping prices elevated. Inventories were well below their 5-year average in late February and are hovering around the tightest supplies in nearly 3 years. So with this as my underlying premise, my top pick this week is an integrated energy company with natural gas assets in the prolific Appalachian Basin, which are utilized for the production and transportation of natural gas. It's a Zacks rank number 1 strong buy. I'm referring to National Fuel Gas Company, ticker symbol NFG. National Fuel Gas is diversified with storage services through its underground natural gas storage fields, transportation to utility companies, industrial companies, and power producers, as well as the sale of natural gas to retail customers. The company's steady process of replacing and modernizing existing pipelines should further boost earnings. National Fuel Gas Company is in an ideal position to take advantage of data center and artificial intelligence prospects to serve growing demand for gas-fired power production. So that's a bit about this company's background and services offering. Let's shift gears a bit and take a bit of a more in-depth look at some fundamentals for NFG. Digging a bit deeper, the New York-based energy company is part of the Zacks Oil and Gas Integrated U.S. Industry Group, which is currently ranked in the top 13% out of approximately 250 industries. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months. Quantitative research studies suggest that about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So by targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. And we can also see here as we scroll down a bit that stocks in this group are relatively undervalued based on the forward price to earnings ratio and are expected to experience above average earnings growth. This serves as another confirmation signal that this group is a great place to be. And moving to our snapshot page here, we can see that NFG is a Zacks rank number 1 strong buy. The company has beaten earnings estimates in 3 of the past 4 quarters, and the stock price is reflecting this bullish theme. NFG has delivered a trailing 4-quarter average earnings surprise of 8.27%. This is exactly what we want to see, as it gives investors confidence that the bullish run can be sustained. The stock is displaying strong momentum and is up more than 20% already this year. Only stocks in very powerful uptrends are able to make this type of move and experience such massive outperformance. Looking at full-year fiscal 2025 EPS estimates, analysts covering NFG are in agreement in terms of revisions. 2025 estimates have been increased by 8.67% in the past 60 days. The Zacks consensus estimate now stands at $6.64 a share, reflecting potential growth of 32.5% relative to the year-ago period. Revenues are anticipated to grow 28.1% to $2.49 billion during the year. These are exactly the types of trends we want to look for when narrowing down our list of potential stocks. So National Fuel Gas Company, ticker symbol NFG, is my top pick of the week. The company's showing strong growth metrics and should continue to benefit from the underlying strength in natural gas. I see more upside ahead for this stock. Thanks for watching, and next up, Nina will share with you her other top pick of the week.
Thanks, Brian. I'm Nina Mishra, and my top stock pick today is Taiwan Semiconductor, ticker symbol TSM. Now, we know that the recent market volatility and sell-off due to trade war and tariff concerns, that has created an opportunity for long-term investors to buy high quality stocks at a significant discount. And I believe that Taiwan Semi is one of those stocks which is a must own in everyone's portfolio because of its moat, because it is one of the most important companies in the world. And it is now trading at about 25% discount. It's trading 25% below its recent high. So let me share my screen and talk about Taiwan Semiconductor. So it is the world's largest contract chip maker, and it has about 60% share of the global foundry market, chip manufacturing market. And more important than that, it accounts for more than 90% of the world's most advanced semiconductors. And these are semiconductors which are smaller than 10 nanometers. And Apple and Nvidia are its largest clients. Let me go to the quote page on Zacks.com. So Taiwan Semiconductor is currently a Zacks rank 2. Number 2, which is buy rated stocks with a style score, VGM style score of A. So excellent rank and style scores. The industry rank is top 2%, and the sector rank is top 31%. So it looks quite good on all those metrics. So the company reported excellent results recently, strong quarterly results beating on the top and bottom lines, and it also raised its guidance. So net profit rose 57% year over year, and revenue rose about 39%. And high performance computing, which includes those AI chips, that now accounts for 53% of the revenue. And high performance computing revenue was up 58% quarter over quarter. In fact, you can go to Taiwan Semi website, and they have an excellent presentation on their website, and you can see that the share of chips which are 3 millimeter, 5 millimeter, that has been rising. They are manufacturing more and more cutting edge chips. And if you look at the revenue by platform, high performance computing, which includes artificial intelligence, that is more than 53% of the revenue now, growing at a fast clip. Now, if you go to detailed estimates page, you will see that analysts have raised their earnings estimates for the current quarter and current year after these excellent results. And analysts remain quite bullish. They expect 47% growth in earnings for the current quarter, very impressive. They expect 34% growth in revenues for the current quarter. And the company continues to beat those excellent, those estimates quarter over quarter. If you look at the price consensus and EPS price chart, you will see that it has missed only once in the past 5 years. Now, there are geopolitical concerns, and that is because most of its production is in Taiwan, and there are fears that China may try to invade Taiwan. But we should remember that China also depends on TSMC for its high performance computing chips. And TSMC is also trying to address those geopolitical fears by expanding its manufacturing footprint outside Taiwan, including in the US and in Japan. And recently, they announced plans to invest at least $100 billion more in chip manufacturing plants in the US. And going back to the quote page on Zacks.com, the company also pays a nice dividend. As I mentioned, if you look at the price chart, it is currently trading at a 25% discount, 25% below its recent high. So because of its excellent Zacks rank and its importance as one of the most important companies in the world, I think the stock is definitely worth a look, particularly in view of the recent sell-off for long-term focused investors. Thanks for watching. Make sure to check out Saks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And we will see you next week with 2 more very interesting stock picks.